All right, so some of you are a little bit more visual, so I am going to give a brief presentation on CLOV for Dummies, Apes, and Leprechauns. So let's start off. On one side, we have the hedge funds, the shorts, the bad guys, and they want to drive the price down. On the other side, we have our CLOV Leprechauns, the diamond hunters who want to drive the price up. And realistically, both sides will meet in the middle and we will get our price, which is stable. Currently, as of today, June 25th, the price is stable around $13 to $15. A little bit on the lower side today, but that's where we've been swinging back and forth for the past few days. Now, what happened on June 7th and 8th? For those who don't know, there was a big price movement upwards. It maxed out around $27, which was way higher than what it's been. So the situation before was that you really didn't have that many diamond hunters back then. Not many leprechauns, and you did have a lot of hedge fund shorting, so the price was down. I believe it was under $10 before the June 7th and 8th rise. So what was able to push it up? Well, there were a lot of options contracts that were written, a lot of call options, and these are represented by the black hats. And these call options forced delta hedging. So this is when market makers need to buy shares to make sure that they are neutral with the call options. And with delta hedging, they were able to push the price up quite a bit. Like I said, it went up to $75. Problem with having these black hats is they are temporary. They are not full-time diamond hunters. They're just part-time help that are bought and come in and can help with the price action. So they left. And the number of diamond-handed leprechauns here remained about the same. The number of hedge funds actually increased. The people who shorted increased because the price was so high that they want to short it some more. So we have more hedge funds now. And same amount of leprechauns, so what happens? Price gets dropped down. And we saw quite a big crash from 27 all the way, I believe, to around 12 in the matter of 2 days. So quite a big drop in quite a short time. So the current situation, for those of you who have joined CLOV, most of you are fairly new, and so we increased our leprechaun army here. So we've kind of evened out now, and we've been able to stabilize the price again, which is great. But we're not here for a stable price. We are here for attendees. So what are our strategies? What are the two options that we have? We can buy and hold more. This is the more common option, I guess, the more common plan. And it is the idea that we can get more leprechauns, more diamond hunters to join, to buy, and to hold, and we can eventually push the price up. More leprechauns, more price action, we push the price up further and further. Now, this is a fairly slow process. If you look at AMC, this is the plan that they use from January onwards to buy and to hold, and from end of January to May, they were able to drive the price up from a low of $5 to about $12, I would say. So 5 months from 5 to 12, not the biggest gains, but still better than a hedge or better than an ETF, right? So not too bad. And the hope is that once you get the price to grow enough, you can get our FOMO crowd. This is our FOMO crowd, and they can get it to rocket. Now, the problem with the FOMO crowd is that they have a short attention span. These are the paper handlers, so once the price goes up, a lot of them will dip out and take profits, and eventually the price will go down because the hedge funds with the high price, they will try to short it more to bring it down. So, and this is a process that is currently happening with AMC, I would say, and GME, where a lot of the FOMO crowd has dropped out and prices kind of stabilized, and this will eventually erode downwards. So it will kind of stagnate, then it will tend to go downwards because the FOMO crowd will eventually disappear. And hedge funds, once they see some options on downward pressure, they will join in. Now, the FOMO crowd for AMC and GME, they never came because of the buy and hold strategy. The price jump from the FOMO crowd did not come because of FOMO created by buying and holding. So option B is options, and this is what I think is what pushed the AMC from the $12 to the $60 range. So what happened was that we had our stagnation here, we had our hedge funds, and then we had our leprechauns. For AMC, it was the apes. But on May 19th, somebody bought a ton of options for AMC, $6.3 million at a $40 strike price. Current stock price at the end of the day on May 19th was $12.95. So a $40 strike price was more than triple what the current share price was. And it was for a target date a month away. So short time frame, big price or big jump in price. So most people who saw that said this guy is a rich whale who has way too much money and is just YOLOing it, which makes sense. But what actually happened was these call options drove up the price, and it drove up the price quite significantly. Within 2 weeks, it had gone up to $60, I believe. So in 2 weeks, they were able to drive up the price from $12.95 to $60 just because of these call options. Now, remember, in 5 months with buying and holding, they were able to bring up the price from $5 to $12. So in 2 weeks, they were able to drive the price up from $12 to $60. So that is a little bit better in my mind. That's kind of the play that I would rather be in. I'd rather be in something where it goes up 400% in 2 weeks versus 200% in 5 months. My opinion, you guys might differ. But once those options push the price up, that's when FOMO hit. If you remember, FOMO for AMC, probably around the $40 mark, is when all the paper handlers, all the people joined in and pushed the price up into the 60s and up to 70 at one point. Now, what happened after that was that a lot of the FOMO crowd did leave, but a lot of them turned into apes. And this is what I think will happen with CLOV. A lot of the FOMO, once we get it, they will turn into leprechauns and they will start holding up the price. So that is kind of what I think our two options or our two strategy plays can be. We can either go for option A, which was buy and hold, and kind of just pray that we can keep that up and that the hedge funds don't close their positions during that time. This can take months, which is not something that I'm looking for, honestly, for this play. I do believe in CLOV as a long-term play anyway. So if this is the trend that we're going on, I'd be fairly happy leaving a good chunk of my money here. Because I think eventually the shorts are going to disappear and the leprechauns are going to disappear, and the company will go back to its natural pricing, which is higher than the current pricing. But for a squeeze play, I want those options in play. I want that FOMO in play, and I want to see huge gains here. That's why I have put my entire portfolio into CLOV, because I think that it is set up for a huge play. We just need that catalyst. For AMC, it was, I believe, one whale since the purchase was made at one time. For CLOV, you know, I don't think we need a whale. I think we need a lot of little guppies becoming a swarm, becoming a school of fish that can, you know, beat out a whale. This is what happened with GME. They were able to raise their price from, you know, under $20 to over $400 with a bunch of little guppies YOLOing everything that they had into options. There are articles that explain this. You can look up Gamma Swarm with a W on Google, and that you will see articles that explain what exactly happened with GME. And I think we can get the same thing going with CLOV. Thanks, guys. Have a good day.